Alright guys, welcome back to my channel once again, and on today's video I'm going to be going more in depth into how to organize your trade, how to map out your market structures, how to take entries, points and zones to take exits and take profit. So we're going to be dissecting all of those today, and today's video is going to be a little bit different. I might take your time, but this is going to be very educational. I promise you, this is going to be very educational. I'm not here to teach you much, but just some few important keys. As you can see here on the Hero USD, we are on the weekly time frame. So as you all know, we all know that in the markets move with waves, which creates on the uptrend. When the market is uptrending, it creates higher highs and higher lows, higher highs and higher lows. And this is not exactly what I'm even going to be teaching you today. If you want to know how the markets move in waves, creating higher highs and higher lows, just check into my channel. I created a video there. But this is just how an uptrend is being formed. And for a downtrend, we all know that the market creates lower lows, lower highs, lower lows, lower highs, and lower lows. And this confirms our downtrending market. So once you already have this basic knowledge, this is what you will use to be able to initiate trade, giving you a more advanced look into the market. They will give you more higher opportunity of identifying a more accurate winning trade. So I believe you all know this already. If you don't know this, check my video in my channel where I explain more about how to map out your higher highs and higher lows. So once you already know that, the first thing you want to do when analyzing any pair, you first come to the weekly time frame. As you can see over here, I'm in the weekly time frame. And this weekly bias, we're just using a top-down analysis here in which it give us more look, in-depth look into the market, more pips away into the market. So as you can see on the weekly time frame over here, we can see this market has created series of lower lows and lower highs. So as you can see on the weekly, this simply means we are bearish. This confirm our first bias. Then we'll go over to the daily, and since we are bearish on the weekly, it simply means we're still going to be bearish on the daily. As you can see, the daily will still be bearish, so we'll still be bearish on the daily, but the weekly and the daily is not what we want to be looking for an entry for. So we just want to use the weekly and the daily to really confirm our bias of the market. Once we confirm our bias of the market, we'll go to 4 hours, and this is where we map out our zones. I hope you're with me, right? If you're new to the channel, kindly subscribe, leave a like on this video. So we'll come back to our 4 hours, and on our 4 hours, let me just draw this out so that it will be more bold. On our 4 hours, this is where we want to know what the market is currently doing. What the market is currently doing. And in most cases, you don't want to use the 4 hours to take an entry. Like I really don't know. Most people use the 4 hour to take entry, but I love to close my trade for the day. Like when I take a trade, I love to close my trade just in few hours. I want to just get done with that trade because I really don't have the guts or the liver to hold trade for that much. That is me. So I love to close my trade for a day and just take my profit and exit the market. So once we come to the 4 hour, this is where we use the 4 hours now to know what the market is still currently doing at that point in time. So as you can see, the 4 hours over here is telling us that the market is still selling. Now I want to work with the present trend of the market on the 4 hours. The 4 hours here is telling us that okay, this market is still selling. So this is when we will now want to take advantage of the lower time frame to know what the market is doing. Are we in the retracement form or this? So we'll just map out our zone from here. Or you know what? Let's use an initial range. Let's use an initial range so that I'll be able to go down in time to just like show you an initial example. So let's assume this market, we are on this point here and the market is selling. Now, since we already know that the daily bias, the weekly bias, the 4 hour bias, we are on a downtrend, we want to focus more on looking for short trades. This is where most people get it wrong. Now, in this section, you are going to be seeing advantage of long trade. We're going to be seeing short trade setup, long trade setup, but want to take advantage more on the long trade. Want to take advantage of the short trade setup because this is exactly what the lower time frame, the higher time frame is doing. I want to just flow along with the higher time frame. So on the 4 hours, we just mark this out. Now on the 4 hours, we see this very big push to the downside, which still indicate that the market is selling, and we don't want to take any entry at this point, because if you look at this point on the 4 hour, now this is not giving us a clear look because this is 4 hours. Now if we want to see what's happening here, just go back to the 1 hour. Now on the 1 hour time frame, you can see it more clearly that this market here is forming series of lower lows and lower highs, and the market is definitely selling. So what do you want to do at this point? Now once you've come back to the 1 hour to now identify what the market is doing, there's something most people mistake, some traders make, is trying to catch when the market is selling, you're trying to catch a short. No, if the market is selling at that your higher time zone, just find for shorts no matter what, even though just position yourself in where you see a short trade. So just as I said, if the market is selling, always position yourself in where you will see a short trade. Even though you see series of higher highs and higher lows forming, just position yourself for a short trade. This is where you have more in-depth look into the market. So let's analyze this market from this zone over here where the market's changed bias. As you can see, we have, let me use this two over here. Where is that two? Let me use this two over here. We have a highs at this point. This is the highest point in which we have before we started to see some change in structures of the market. Now we started seeing change around the zones. Let me mark that out as well. So you just mark out all of those zones you are seeing change on. In mostly, I don't use 1 hour for my entry because that will be more pips to my stop loss. So, but I just use this 1 hour to mark out zones. As you can see now, this is giving me another in-depth look into the market. We have a highs here, higher low, higher highs, higher low, and the market consolidated at this point over here. Then we have this big push to the downside, creating another higher highs. Now, this consolidation here, in which we see here, is a very big level, and this is like a psychology level. Let me mark this out. This is a psychology level, which if price come back to this zone, we're likely to see a lot of triggers around here because we have a lot of liquidity lying at this point. So this is what you do at this point. You just map out the zone over here. You map out this zone over here. Then you go to your 5 minutes. This is how I trade. Once I just get my clarification on the higher time frame, I just go to my 5 minutes straight up. Now on the 5 minutes, I have to zoom this a little bit so I can get those clear pictures there. Okay, that was the zone. Now this is the zone. Now you don't just go into that zone to start buying or selling. I'm going to show you how to do that. Now once you go to your 5 minute zone at this point, a lot of orders are being packed over here. A lot of orders are packed over here. So we use this point now as a point of liquidity and our entry point. Now you want to place your trade above this section because once this market is coming up to this side, you want to come and take out all of the liquidity line here. All these are liquidity. You want to come and take out all of them. And I'm going to show you that this work over and over again. This is the same methodology we are going to be using to pick out all of the trade. Although some are not going to play out, some are definitely going to play out. So let's just watch it there. I'm going to be using the replay to, let me just use this key tool. So now I'm anticipating the market to come and take all of this liquidity. Once it come back, you see we have a lot of liquidity lying here. Once it come back to take out all of this liquidity, where's the short to? Now the market is selling, so want to concentrate more on selling. Okay, you are seeing this like is because we're now on the 5 minutes. So want to concentrate more on selling trade. Let's just see. Let me play this. Let's see how it plays out. Once it come out and take out all of this liquidity, we draw it out, we look for another trade entries opportunity once again. So let's just see how it plays out. This is just a simple methodology, a simple system you can use to grow that your small trading account, turn it into something wonderful and awesome at the same time. So let's just see how the trade goes. We're going to pick several trades on this pair on Euro USD using the same methodology. You're looking out for market structure and trading out liquidity. But this method just needs patience. Once you just get out those, and something again, you could still catch a buy trade here to still catch a buy trade, you're using the same principle. But once you're catching a buy trade, just use a lesser um, risk because the market is not going in the buy position, but you can still catch a buy trade, but just using a more lower lot size and big points trade on that direction if you want to take the retracement to the side. But let's see how this plays out. Let me increase this a little bit. Now you have to be patient and just wait for the market to get to your zone. Trading is more about being patient, more about being patient. So you can, this is just a see, we now have, now this low would be your take profit. Don't be greedy. This low would be your take profit. Once that market go and take out the liquidity at the top side, your next take profit will be this zone. Another structure is being created and this would be your take profits. You can also get another entry. So you need to be patient for the market to play around and give you another entry point. So let's just play this thing. Now we now have this new zone, which is our new take profit zone, and wait for the market. It broke out in this structure. We now have a new lower low. We wait around to make another, to see, let the market create another structure for us. Then we take another entry. In this case, you can just switch to the 15-minute again so that you have a more clearer picture of what the market is currently doing. So let's play this. Let's play this and see what the market will give us again. So we now know that we are just basically looking for sales. We are basically looking for sales. No matter any long setup the market give us, we are not taking it. The weekly is bearish, the daily is bearish, the 4 hour is bearish, and all our focus is just looking for sales. Any long trade setup we see, we're not going to take it. We're looking for high probability trades, and the high probability trade is going and flowing along with what the higher time frame is doing. So let's wait for this market to play out so that we'll look for another liquidity zone in which we're going to take our next trade from. So let's just see. Let's see how it plays out. Let's see how it plays out on the 15 minutes. Once we get a look of what's happening in the 15 minutes, then we'll jump over to the 5 minutes to take our entry. And just as I told you, I haven't done like this back testing, but I know we might fail on some trade, but you see that the risk to reward will still put us more in profit. So let's just see. Okay, I'm seeing something here. Let's just see what the market does. And okay, wait. So at this point in time, we see that we have some structure change. Now we have amount of liquidity lying here. Same structure, same methodology. So let's go. This will have some amount of liquidity lying at this point here, over here. As you can see it, we have liquidity lying at this point over here. So we'll just mark it out. So where's my box to? Sorry, it's like my so at this point now, you see that we mark out this zone. Why do we mark out this zone? The bulk of the liquidity is lying down here. The bulk of the liquidity is lying down here. And if this market should retrace to come out, it will definitely want to take out this liquidity take out this liquidity before it sells. So let's mark out this our liquidity point in which we have here and draw our um, entry point once again. So let's go. As we see now, we now have liquidity lying here, and we're anticipating the market to come back and take out all of this liquidity before selling. So let's use the short tool over here. Let's place our stop loss. Now the low, which is this low over here, would be our take profit zone. Always make sure you use this low to be take um your profit on that initial trade. You don't have to be greedy, guys. Oh, this is too big. Let me take it out and do something realistic here. Sorry, I don't want this video to be very long, but I just want you to really catch the main details. I'll try my possible best to see maybe I will be able to cut some unnecessary parts out of the video. But let me just make past the message. You should be clear. Give your stop loss some room. You have to give your stop loss some room. And as you can see, we're anticipating the market now to come, take out this liquidity, and sell, and this would be our take profit. So let's play again and see what the market does in this point. At some point it created another low for us. Let me pause this a bit and drag out down. We now have another stop loss zone. I'm sorry, take profits at this side over here. So let me just bring our take profit down. So you just have to be patient and let the market play out. Let the market do its thing. You already know your zone in which you want to look for that sell again. Oh, that was a really big move. You this method, you might miss some trade, but if you can just stick to the same method, if you miss the trade and it come to this side, take out this liquidity and come back, you just leave the trade and look for another zone again to just keep tapping into the market, keep tapping into the market. But once it has not come to take out this zone, this it has not come back, because we're looking forward to the market taking out this liquidity, come back to take out this liquidity before creating another pool in which we are going to trigger. But if the markets come and take out this liquidity, take out some liquidity, it didn't take all, and it come back to take out this one, you might just like want to just look for another entry in the market. But let's just see how it plays out. Maybe we miss this trade, or is going to tap in our entry before coming to the take profit. And don't force yourself into trade. Once you miss a trade, just let it go. Just let it go. Once you meet a trade, let it go. And this method could work on any time frame. As you can see, this is also a double bottom, and liquidity is lying here. There's a lot of liquidity lying here in which the market should come and take out. But if it didn't take it out, still and still, we're still in the game, man. We're still up in the game. So guys, let's see, maybe we get take. And something I really need to remind you guys: once you set a trade using this method, a take profit or a stop loss, I will really much advise you to just, once you place the trade, the market might play around after tapping into your entry. It might play around for some while, but just have that courage to just let the trade run. If the trade will stop you out, there's nothing you will do about it. It will definitely stop you out. But if the trade would go in your favor, it would definitely come back to take out this liquidity. So you don't want to break even. As you can see, we now tap into profit, guys. We tap into profit, and we now have this zone now created. Let me pause. Let me pause this once again. So you can see this trade now work in our favor again. Let me pause this once again. We're going to place series of trades using the same method, guys. Okay, so I feel like I'm explaining way too fast. So let me just calm down and recap everything I've everything we've talked about once again before we proceed. So I said once you open your charts, you want to look at the weekly, daily, and probably the 4 hours to tell you the initial direction of the market. You want to use the higher time frame to know exactly what the market is doing. Is the market buying or is the market selling? If the market is buying, then you want to use your shorter time frame now to look for entries. If the market is selling, then you want to use your shorter time frames to look for a sell trade as well. But you don't just go into the shorter time frame now to just sell at any point. You must have a particular section in which you want to sell, and you must have a reason for selling at that point. That's why we come up with all of this maths over here. So let me just do you a rough sketch of everything I've done at this point before we proceed into the chart again. Let me just draw out a rough sketch of what I simply meant. So I told you when the market is coming in a downtrend, we still work with structure. It creates lower lows and lower high. And once we have a lower low, the market will definitely create another section for us like this. Then we'll see a drop this way. It will create lower lows and lower highs. Now, once we create a lower low, the market will definitely retrace. And once the market is retracing, you have to watch out for when the market is retracing. Once the market is retracing, the aim is to come back to take out all of the liquidity in which we have at this point over here. Because now this at this point when the market starts forming series of lower low, a lot of people are going into the market and they're having their stop loss at this zone, and the market need all of those stop loss for it to sell again. So once the market is retracing now, the aim is to go and get all of those structure, all of those stop loss, all of those structural stop loss before it now take another solid move. So we are going to have the market come back to take all of the valid stop loss, then it's change movement again to create another lower low. Now, once it's creating another low, this would be the aim to come back here and take out this low in which we have here. Once it take out this low, once you take out this load, then you wait again. You know that we now have another structure being broken out. Then what you want to wait for again is for the retracement of the market. You want to wait to see where the market retrace to again. What are the zones in which you think people want to join this market to start selling? Because everybody know about market structure, lower low, lower high, lower. Everybody know about market structure. Now, once this market starts selling again at this point, you see that many people will start jumping into the market and they'll set a stop loss at this point over here. Once they set that stop loss at this point over here, now this is the aim of the market. That is what the market is going to do. And we now have this zone over here as well. This is now the downside liquidity. So what probably this market will do, it might sell down to this side. It might come back here, take out this zone, and once it start to retrace, the aim now is to go and take all of this stop loss over here, all of this stop loss, all of this stop loss that has been set in this place. The aim is for it to go and take out all of those stop loss before it now give you another initial move to the downside. I hope you really just could oh sorry, I hope you really could just grab a little idea of what I'm just trying to talk about as well. So just look at the same structure we have it at this point. The market deep down, give us a retracement, go back down, came back to take out all of this stop loss and structural in which we have at this point before you see that we have a solid move, and it's come back here, will give us another retracement down, come back to take out the stop loss. So this is just the energy is just how the markets move over and over again. And this is just the example in which I set for you at this point. You see that the market dropped down, and once it's retracing back, this is where we have a lot of stop loss because it created new structure for us at this point. And anybody going into this trade will set a stop loss here. So what is the plan of the market? Once it starts retracing, it's going back to take out all of those stop loss in which we have at this point. And same thing for here at this point, well, after the market take out this stop loss all the stop loss here, it created a big push to the downside and it retraced again. After the retracement, you can see that it gives us another structural move. Once the structural move is being created, anybody joining this sell trade now would have a stop loss around here because this move has already created structural move for us. Once the market starts retracing, his aim is to go and take out all of this liquidity. You take out this liquidity we have here, take out this liquidity we have here, because that is where the money is. It's taking out all of this liquidity before it sells back down. So that's just the way to see the market. Once you have uh, an eyesight to see the market in this way, some trade would definitely not go in your way. You can't win all of the trade, but you win some trade. You have a more higher winning rate in the market. And if you lose a trade, you will just lose only a small percentage of it. So to just cut the video short, if you're new to my channel, do ensure you subscribe and leave a like on this video. And I also have a premium one-on-one online course if you want to join my mentorship program, where I'm going to be showing you everything you need to know about trading liquidity and how to mark out your structure, how to know um, the point zone in which you are going to be taking out your trade, your take profit. I'm going to be showing you everything, fair value gap, how to read everything. I'm going to be showing you in that course. And if you are in my premium group as well, or my free group, you see most of the signals I drop there, like some of them I'll be dropping on the screen. You see that I use the same pattern to take out all of this trading which I drop for you guys. So this is the guy, and this is one of my favorite strategy in which I use in taking out the market. If you want to learn more, I'll drop my number in the description box below. If you want to sign up for my premium course, you can also do that as well. So see you on the next video, guys. Peace.